Wait, can anyone see my screen? Okay. So welcome to the Hoperation Fund meeting. Today we're gonna start out with a quick introduction. Then we'll move on to like some stock market analysis and a fund updates. So established on May 18, 2023, the Hoperation Fund is a philanthropic venture led by young minds. Our fund strategically allocates capital to the stock market following the renowned investment strategy of Data Legend Capital Management. So there's three major phases of the Hoperation Fund. You lend money to us, we manage the fund, and you take back the money and we donate profits to charities. So for phase one, collecting the capital, you can send money via Zelle to this Gmail, then fill out the form and look for confirmation from the Hoperation.fund Gmail. For the second phase, the fund operation, you can check how we make profits by attending our monthly online meetings. You can check your name showing in our website and your preferred organizations to help. And you can get to learn some financial knowledge, receive market risk evaluation, attend our guest talk, and share your thoughts and suggestions. So after 6 months, you can send an email to hoperation.fund if you want your money back, and you can ask for your money back. Then you can confirm your money is back to your bank via Zelle. Finally, you can check our website and see where the profit is donated. So now let's move on to our fund updates and investment strategies. So here's a theoretical performance comparison, and if we use this portfolio in 2012 to 2023, as you can see here, the Hoperation Fund has an average compound annual return rate of about 26%, while QQQ has an average compound annual return rate of 18%, and SPY has a compound annual return rate of 13%. So here's the capital we received in May. We received $880 in May, $870 in June, $1,420 in July, and $50 in August. The return of the fund in August was about negative 0.06%. So the fund's total return was 8.6% in August. But this is because during about Okay, can you guys please mute yourself? Sorry. Okay. So during about these during this period, note that the stock market wasn't really good. Like the S&P 500 index fund had a decrease of negative 1.6%, while QQQ had a loss of negative 1.5%. And also note that in August, the fund added a new position, MA, with 1% capital. FTNT also dropped 25% in one day due to a business order delay and some overreacting of the stock market. However, FTNT only occupied like 0.5% of our account, as you can see here. So it didn't make that much difference. Okay. The return of the fund in September was negative 3.2%, compared to SPY, which had a loss of negative 4.7% in September, and for QQQ, a loss of negative 5% in September. In September, hedge funds were used to reduce risk because the market was showing some instability, and like the majority of stocks were going down a lot. The return of the fund in October was negative 0.65%. So here's a comparison of our portfolio to SPY and QQQ. SPY had a loss of negative 2.2%, while QQQ had a loss of negative 2%. Noting that in October, the fund sold land due to macro trend changes in the housing industry, which we will talk about later. It also increased the positions MA and INTU and added the position UPRO. We'll also talk about this later. The return of the fund by November 3rd was 5%, and the fund's total return from I think May to November was 9.3%. By November 3rd, the return of the S&P 500 index fund, SPY, was about 3.9%, and the return of the NASDAQ 100 index fund, QQQ, was about 4.8%. Also note that by November 3rd, the fund added the positions Costco, ITB, and DRN, and increased the position UPRO, with about 11% of cash remaining. So here's an overall performance comparison of our fund against SPY and QQQ. Here are like some columns showing the returns for each month. As you can see here, while our fund may sometimes underperform SPY and QQQ, like undergain, but usually it has less losses than SPY and QQQ, and in total it earned 9.3%, while SPY earned 4.8%, and QQQ earned about 5.96% or 6%. So here are some charts of accumulated gains from donators. They show the original capital invested, the return in each month, and the total return, as well as the profit made from the original capital. For example, if you invested $500 at the start of the Hoperation fund, then you would have about $46 to donate. So here is the accumulated gains from the donators continued. Okay, now let's move on to our fund activities. So for FTNT, it experienced a 25% drop in stock price in a single day following the report of some business order delays. Additionally, after the release of the November financial report, the price declined by another 12% within a day. But it's important to note that these price fluctuations have not had any significant impact on the company's fundamentals, like its business strength and its balance sheet. Also, its position size is only about 0.5% of the entire portfolio. So therefore, we have decided to maintain our position on FTNT. Also, by the way, does anyone have any questions so far? Okay. Also, you may notice another stock. We talked about land. We decided to sell off our position in land due to significant and really sudden macroeconomic shifts over the past few months. So the sharp increase in interest rates has had a really big impact on the housing industry. So this impact is evident in the noticeable decline in housing starts, which serve as a leading indicator of the housing market and overall economic condition. Furthermore, the pressure on different home builders to lower house prices or offer additional incentives has begun to erode the profits and cause the profits to decrease. So considering these factors, we made the decision to exit our position in October. As you can see here, here's a chart of housing starts. Housing starts are basically like a good indicator of the housing industry. The blue lines and red lines are moving averages, which also help to show some like general trends of the market. But as you can see here, the housing starts have had a decline. So yeah. Two other stocks or funds we decided to invest in are DRN and ITB. So we initiated a position in DRN following the November Federal Reserve meeting. So this meeting conveyed an important signal that the Fed intends to halt interest rate hikes, and might even reduce interest rates in 2024. So throughout the period of interest rate increasing, the real estate investment trust or REIT sector suffered the most substantial impact, resulting in oversold conditions for many REIT stocks with discounts ranging from 10% to 30%. So basically, many like real estate investment trust stocks have gone down a lot following the interest rate increases. And like we believe they are now really oversold. So taking these factors into consideration, we decided to add a position. Drawing from the same reasons mentioned earlier, the anticipation of the Federal Reserve pausing interest rates and potentially reducing rates can serve like as a catalyst for increased buyer interest in the housing industry. So like when interest rates go up, the housing industry basically goes down a little. Or when interest rates go down, the housing industry can go up a lot. So this acts as a favorable tailwind for house builders. This also prompted our decision to initiate the position following the November Fed meeting. As for another stock we added to our portfolio, Costco, we initiated this position in November based on a seasonal pattern. For more in-depth insights and details, you can refer to my YouTube video. Here's the link. You can watch it later. Basically, to summarize, Costco over the past few years, and every year in November, it has had a positive return. So here's a chart you can see from 2009 to 2022. Or like every November, Costco has always had a return from 5.4% to 7.7% to 2.8%. But it's always had a positive return. You can in the stock market, you can call this a seasonal pattern. Another stock we initiated is UPRO. We initiated this position based on a major trading signal from Data Legend Capital Management.